Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody. Today guys we have to talk about the Australian dollar again, because the situation not quite changed, but there are some signs of the menace have appeared here on the daily chart of the Australian dollar, and we have to estimate whether this really could be the hazard for our third drive pattern, or that just a temporal bounce and market will continue to move down. That's the topic of the current update. Still, as you know probably, that the FOMC minutes that have been released yesterday has shaken market a bit because there was moderately more hawkish discussion concerning the rate hiking have appeared, and currently, if I understand correctly, the core of the discussion is the major concern among the members of the FOMC stands on utilizing of labor force in the United States. So everything is nice. The unemployment is decreasing, the corporate profits increasing, the inflation moderately increasing, and major concern is underutilizing of the labor force. It's a really low percent of the utilizing. And the second is some questions also was around temporal decrease in the gross domestic product pace in the first quarter. So, but anyway, the comments and the discussion was a bit more hawkish than previously. And right now, all eyes will stand on the Yellen speech in the Jackson Hole in Wyoming. That will start from Thursday until this Saturday, and Yellen will speak on Friday. Well, speaking about the Australian dollar, there are two major moments for discussion today. So, in general, our three drive pattern is still valid and could be realized, could be reached, and the target where market should stop downward action and should give us the retracement based on this pattern is in area around 90 to 1090 to 15. So you can see the crossing of the extensions of the drive stands here, daily oversold, monthly pivot support one, so that moments that we have discussed already. But today we probably have to call you to move your stops on the break even. So if you trade not only on the daily chart but on the intraday charts, and as yesterday we said that probably could try to take the short position based on retracement, on the yesterday's retracement, because the potential action from the yesterday's level right to the destination point of the three drive was not small. It's approximately around the 100 pips. But today we have two signs that potentially could be the menace for this three drive pattern, and they are first the small wash and rinse of these lows that we have seen yesterday, and you will see it with more detail on the intraday charts that we will discuss a bit later. And the second, take a look, that's a potential bullish grabber. Currently, we can't say definitely whether it will be really bullish wash and rinse, and whether it will be the really bullish stop grabber that suggests taking out the stop, or that was just a reaction on some support on the intraday chart support, and market will continue to move lower. But this is the potential hazard for the free drive. And if you have taken the short position, yes, it's better to protect your position with the break-even stop, because if this is just the temporal bounce, you will probably be able to keep your position. Market hardly will move higher, and you will still get the profit in this area. But if this is really a reversal, that carries the potential risk, and it's probably to protect your position. So that's two moments on the daily chart that carry potential menace for the three drive: is the potential grabber and the bullish wash and rinse that has happened right now. Currently, we can't say whether it will be real stop grabbers or whether it will be confirmed, because market hasn't closed yet, and we will see it only by the end of the day. because market potentially can as hold here and confirm the stock grabber, or it could continue move lower and erase the confirmation if trend will shift bearish by the end of the session, right? But this is the potential pattern that we have to keep an eye on. On the 4-hour time frame chart, you could see this wash and risk better, so that's the lows of the second drive, and you can see that market has slightly grabbed probably the stops or just washed out these lows slightly and jumped up. Okay, we can't justify this action only by the hitting 618 extension and minor extension of this ABC top pattern, because it was really a significant drop below this target, so market in fact has passed through it, as through the weekly pivot support one. Now it's return right back up. Hardly this was the reason for that return right back up. Also, guys, it's interesting that the target of this ABCD pattern stands precisely in an area of the three drive pattern on the daily chart, the same area of this ABCD down and the target of the three drive. Not quite the target, the destination potential reversal point of the three drive. Okay, so it really not by chance the market could continue move lower. Personally, guys, I think that this bounce up right now is mostly temporal, and mostly is based on the completion of this hourly ABC top D pattern. That's the reason for the bounce. And if this is really the true, then take a look. Within this ABCD, we could find some nuances that point on a possible downward continuation. What nuances are? First, take a look that the CD leg is faster than AB. So market has hit the target of the ABCD earlier than it should be. Second, we see the fast acceleration due to the FOMC minutes released probably yesterday. So the market accelerates right to the target of the ABCD pattern. It means that it could show the retracement, but it's very probable that it will continue move lower to the next target. And for us, it will mean that on the 4-hour time frame chart, market will continue move lower, and if it will move below the 618, the next destination point is only 100% extension. So there's no supports around this area anymore, and that increased chances that market still will complete this three drive pattern. That's just my personal thoughts. That's why I call you. So if you have taken the position here yesterday on a retracement that we have discussed, if you have taken shorts here, protect your position with the break-even stop, because if we will ride and market really will continue move lower, you will keep the position and you will get the profit at 92.15 area, 92.10 area. But if we will wrong, market will erase this three drive and really will turn to the upside, you will lose nothing. Because as we said earlier, our major object is the three drive, and if market will turn to the upside, taken out of these highs, we will just not get our pattern. That's all. Because our entry point is right here, and if market will not reach it, we just will not get the entry point and will not get the pattern. And for those of you who trade on the daily chart and wait for this pattern, that will be just the erasing of the context, and you won't take any risk. But those of you who already have the shorts by the scalp trade that we have discussed yesterday, right here on this retracement, protect your position with the break-even stop. Well, on the hourly chart, guys, we should keep an eye on two possible levels. The first level is right here, it's the 3.8 resistance, and since this was really acceleration, market could turn to the downside from anywhere, from the 3.8, from this confluence resistance, from the 618. Any of these levels are suitable as a reaction on the ABCD pattern, and retracement after the completing of the ABCD pattern absolutely doesn't mean that market can't continue move lower. But since this was really fast leg, we prefer to get small retracement either to 3.8 or to the confluence resistance. Also, guys, take a look that the confluence resistance coincides with this previous bottom. That will also is the natural support resistance line. You can see support, support again support, and then breakout. So market could retest this, but I prefer to see if market is really bearish and it's really has intention to continue move lower and to complete three drive pattern. I prefer that retracement will stop either here or here. I don't want to see the deep retracement. Also guys, pay attention to this moment. So here we could get the hourly bearish grabber. If this will happen, that could mean that market will reestablish downward action right from the 3. That will be even better. So that's our view on the Australian dollar. If you do not have position, wait when the market will complete the 3 drive. If you have short, protect you with the break even. Because that will save your money if we will be wrong. But in general, we expect, and based on this action, it seems that market probably that's just temporal reaction on the completing of this ABCD, but not the signs of the reversal yet. And it's really big chance that market will continue move to the 90 to 15 area and will finally complete the 3 drive pattern. And maybe if market will form here the grabber, bearish grabber, it could even start this downward action could start right from this area.